Hey everyone, welcome back to Corporate Decoder. Today, Realty Incorporated just filed an 8K announcing a new debt offering, and I'm seeing one interesting strategy that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is raising $1 billion through new notes, and it looks like they are trying to get ahead of potential future dilution. Alright, let's dive into what Realty Income Corporation, a big player in the real estate investment trust world, has been up to. They just announced a significant financial move, issuing a large amount of new debt. Think of it like a company taking out a big loan to fund its operations and growth. Specifically, Realty Income Corporation, or the company as they call themselves here, has issued a cool $1 billion worth of what they call 3.75. 0% convertible senior notes due 2031. That is a mouthful, but let's break it down. Convertible means that at some point in the future, these notes could be turned into shares of the company's stock. Senior notes means they are a higher priority to be paid back if the company runs into trouble, and due 2031 tells us when they are supposed to be fully paid back. They also granted an option for the initial buyers to purchase an additional $125 million worth of these notes, and it seems like that option was fully exercised, bringing the total to $1.125 billion. This whole deal was done through a private placement, meaning it wasn't sold to the general public on the stock market, but rather to a select group of investors. This is often done to speed up the process and avoid some of the regulatory hurdles of a public offering. Now, what are the terms of these notes? They will be unsecured, meaning there is no specific asset tied to them as collateral. They're ranked equally with other similar debts the company might have. They carry an interest rate of 3.750% per year, and interest payments will be made twice a year, in February and August, starting in February of 2027. The notes are set to mature on the 15th of August, 2031, unless they are bought back, redeemed, or converted before then. Here is where the convertible part gets interesting. Holders of these notes can choose to convert them into shares of Realty Income's common stock under certain conditions. One condition is if the stock price goes up significantly for a while. Another is if the trading price of the notes themselves falls below a certain level compared to the stock price. They can also convert if the company calls the notes for redemption, or if it is close to the maturity date. The initial conversion rate is set at 13.7512 shares for every $1,000 of notes. This means the initial price for converting these notes into stock is roughly $72.72 per S-share. When a note is converted, the company will pay back the principal amount in cash, and then, depending on the conversion rate and stock price, might pay the rest in cash, stock, or a mix of both. Realty Income itself can't just decide to buy back these notes anytime it wants before the 20th of August 2029, with some exceptions. After that date, they can redeem them, meaning buy them back under specific conditions. One condition is if the stock price has been significantly higher than the conversion price for a certain period. They can also redeem all the notes if the total amount still outstanding falls below 10% of the original amount. There is also a special clause allowing redemption if it is necessary to maintain their status as a real estate investment trust, or REIT, for tax purposes. Now, this is a pretty clever move. Alongside issuing these convertible notes, Realty Income also entered into what are called capped call transactions. Think of these as a form of insurance policy. They bought these contracts from financial institutions, and they are designed to offset some of the potential dilution if a lot of these notes get converted into stock. Essentially, if the stock price goes way up and many note holders convert, the company might have to pay out more cash or issue a lot more shares. These capped call transactions help limit that potential downside. The cap price for these call transactions is set at about $83.55. This is roughly a 35% premium over the stock price on the day they price the notes. This means that up to this cap price, the company is protected against the dilution from converting notes. The cost for this protection was about $33.2 million. It is important to note that these capped call transactions are separate from the notes themselves and don't affect the rights of the note holders. This section confirms that the notes were sold to initial buyers who then resold them to qualified institutional buyers, basically big, sophisticated investors under a specific rule called Rule 144A. This means the shares that could be issued from converting these notes are also not registered with the SEC. Again, relying on exemptions for these types of sophisticated investors. Initially, up to about 16.16 million shares of common stock could be issued from these notes. This part just states that on the 14th of August 2026, the company put out a press release announcing the closing of this offering. It is basically just a formality to make sure everyone has the same information. Like most corporate filings, there is a section with forward-looking statements. This is where the company talks about what they expect to happen in the future. They mention things like the intended use of the money raised, potential share repurchases, and plans for growth and investments. However, they also include a big disclaimer that these are just expectations and that actual results could be very different due to a lot of risks. Looking at the broader picture here, Realty Income is using these convertible notes and the accompanying capped call transactions strategically. They are raising a substantial amount of capital which they can use for various purposes like making acquisitions or paying down other debt. The convertible nature of the notes and the capped call strategy suggest they are preparing for potential future stock price appreciation. By having these protections in place, they can tap into the debt markets while hedging against the dilution that could come from converting those notes into equity. This last part just lists the documents that are attached to this filing, like the actual indenture, the form of the note certificates, and the confirmation of the capped call transactions. These are the official legal documents that back up everything we've discussed. Now, looking at Realty Income Corporation's overall situation, the company has a market cap of nearly $60 billion and a price-to-earnings ratio of around 45. This suggests investors have high expectations for their future earnings. They also recently raised $1 billion and used some of it to buy back shares, which can be a positive sign. However, this new debt issuance, while strategic, adds to their overall leverage. The fact that they are already thinking about hedging against dilution from these convertible notes hints that management might be confident about the company's stock performance. A comparable situation we saw was with APL back in 2020 when they issued convertible notes. The market reacted positively then, seeing it as a sign of future growth and a smart way to manage equity dilution. For Realty Income, this move allows them to raise money now at a 3.75% interest rate, which is relatively low, and if their stock price does take off, the capped call transactions will help mitigate the impact on existing shareholders. My biggest concern is always the execution of their growth strategy and how they manage their debt obligations in potentially rising interest rate environments, but this filing shows a proactive approach to capital management. Oh, and the research tools I actually use are linked in the description. They help keep this channel going, that is my take. Stay decoded if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.